The dollar drama very much the focal point in currency trading this week. Let's find out more from Jeffrey Halley of Saxo Capital Markets. Welcome.
Hi.
Yeah, great to see you. So the dollar hit a psychological threshold earlier this week and then ultimately pulled back a little bit and pulled back a little bit more thanks to Janet Yellen. Is this just a little bump in what's going to be an upward trajectory?
Well, it certainly was more of a speed bump than a little bump. We saw some of the largest moves in the last 20 years and over 24 hours range-wise with the euro dollar in particular, but also the other G10 currencies. I think some of the comments that the Federal Reserve made on the US dollar itself, what they've done is put a shot across the bows of the market, trying to perhaps curb some exuberance and general long dollar positioning. But we're still firmly in the dollar bullish camp for 2015.
Against which ones? Mostly,
just about everything actually. So we think it's going to be the US dollar year. And basically the thing is to choose your levels. So the difficulty this year will be riding out these bumps that we saw this week. It's actually choosing the correct levels to get in, but we think that the US dollar will be generally higher against most currencies this year.
Jeff, where do you see euro dollar by, say, June, and where do you see euro dollar by the end of the year?
Oh, I think we're definitely heading towards parity. I think anywhere above 110 now, there's going to be a lot of sellers out. I think the move over the last couple of days post-Fed was more of a liquidity issue because the announcement came out in New York time, and that was the function. And if it had been during the European hours, we wouldn't have seen such a move. But we're definitely going to parity, possibly as low as 90 to 95 by the end of the year.
What about EM currencies? Because just before Janet Yellen spoke, there were a lot of concerns that there was going to be a repeat of taper tantrum, and then all of a sudden that story seems to have a little bit have passed out a little bit.
Yeah, I think this time most of the EM countries, as such in a blocker, they have an easing bias anyway at the moment. It's really only the United States and New Zealand and the most of the globe that has some sort of semblance of a tightening bias. Everybody else is trying to be the ugliest horse in the glue factory. But I think this time the positioning's different in the market, and and hence we're not seeing so much of this panic that we saw in 2013.
Which ones would you really be looking at in terms of EM currencies? We had the Indonesian rupiah, we had the ringgit, we had the real, and they really stood out as the ugliest of them all.
Yeah, well, I think you pretty much named the three best ones in that salubrious group, to be honest. I think particularly Brazil's throwing up a number of challenges this year, and I don't see Brazil doing too well out of 2015. I think the Indonesian rupiah will be under pressure through most of the year as well, and certainly if oil remains at these low levels through 2015, we're going to see a lot more stress on the Malaysian ringgit. I think it'll show up most in countries that are running very large current account deficits and have large US dollar borrowings, in which case they're going to be caught in the dollar whammy.
Do you see a repeat of the taper tantrum happening?
I think a lot of people ask what the Fed's reaction function is towards EM. And I just don't think there is one. If the Fed were to look and talk to the central banks of EM right now, it would say, do you remember what happened in taper? Have you learned anything from what happened in taper? And we're now almost 2 years later. You can't blame us and our policy for what happens to your currencies and what you've done with your current accounts. So I think the reaction will be exactly the same again, and I concur with Jeff. It's going to be a very dangerous time for EMFX.
Is that why you think that there is a risk of an global equity sell-off?
I think, again, Chloe, I think we have to differentiate within equities between cyclical equities and defensive equities. I think we're coming into a multi-bear market of defensive equities. What that essentially means is, like I mentioned earlier on, yields are bottoming. That's going to happen in equities too. Now, if I like cyclical equities, there's plenty of cyclical indices that I can buy, and China being the biggest and the best. And there's plenty of defensive equity indices that I like to sell. And Indonesia would be our favourite as a defensive index to sell.
Very interesting. Before you go, some of the top trades that you're looking at.
We're looking for obviously euro to head lower. That's a mainstream one that most of the world seems to have. Certainly we think the Australian dollar will resolve towards 0.7. Yeah, and we're actually very bullish on dollar Norwegian as well. So we're looking for much higher levels in dollar Norwegian this year, as we expect oil to stay low and for Norway to actually embark on a very aggressive easing cycle.
Wow. Well, great stuff there.
Okay.
Much appreciated. Jeff Halley of Saxo Capital Markets and Jason Ambrose of Vonda Securities as our guest host. Well, thank you very much, and we'll do this again very soon.